Hi and welcome to our Market Insight for October 2017. I'm Aaron Upcroft. I'm here with Rob Gilmour.
Good afternoon, everyone. Good afternoon, Aaron.
Afternoon, Rob. So things have been pretty comfortable and stable at the moment. Rates have been on hold. Things are nice and steady. What's your take?
Look, it's a very similar tune coming out of the Reserve Bank. Rates, are on hold. They are pretty comfortable with where things are at the moment. And I think for the first time in a long time, we are actually seeing synchronized growth around the world.
Yeah,
so
right.
The US is continuing to be a strong economy. Europe is coming out of its doldrums. Japan is growing, as is China. And Australia is performing reasonably well. Employment is strong. Business confidence seems to be improving. So it's pretty good at the moment, and investors can feel reasonably comfortable, but certainly not complacent.
Yeah, I don't want any investors to be complacent. There's definitely some changes up around the corner for investors and in the debt markets. There's a lot of interest-only loans that are still out there. We really don't know what's ahead for interest-only loans and how long they'll be around for.
So, I mean, what's going to happen on that front in terms of changes on interest-only? Because that can be quite big for investors.
Look, yeah, realistically, it's a big cash flow hit. So if the structure of these loans or the availability of these loans isn't there when they come up for maturity, these loans are going to convert to principal and interest. So it's going to go into a big cash flow hit for investors.
So someone who has an investment property and it's structured correctly, it's on interest only, they're focusing on paying, say, down their mortgage first.
Correct.
Their investment loan then becomes principal and interest, so they are having to fork out a lot extra.
A lot of extra cash flow each month. It may make the investment untenable in some ways. It may mean that their affordability takes a hit. So there's a lot of changes that are there, and we really want to make sure that people are really careful about what they're doing right now, because it's not about right now. We are comfortable, we are stable. It's about what's coming up in those 1 to 3 years.
Well, everyone talks about cycles, and things do happen in cycles, and they certainly say that history doesn't repeat itself, but it does rhyme.
It does. And look, haven't we had the 30-year anniversary recently of the Black Monday? So
yes, 30 years ago,
did that
1987.
have any effect? Or?
Look, it was massive at the time. I mean,
Right.
Stocks fell 33% in 2 days.
Whoa. Right.
Which sent huge panic around the world.
Right.
And look, it's not surprising that when we're 10 years into the current expansion, there are clients that feel that after the GFC, 10 years of expansion, that another cycle might be coming to an
Sure.
end. And I think what it comes down to is you can't be constantly looking behind you with worry,
Yeah.
but you do need to be prepared, and you do need to have a strategy and approach that can ultimately get through cycles. And so what that means is just some clever ideas in terms of how you approach things.
And I think it's probably some rainy day planning, don't you think? Like, even for me on the debt side, how low is the bottom of that barrel, So I think we're there or thereabouts, and it's about now looking towards those 1 to 3 years and planning for that rainy day.
Look, definitely for those clients that are living off their portfolio in retirement, we always we say, at least 1 year of your income is sitting there in cash, and then having another couple of years in liquid defensive assets, ready there to go. So you're not forced to sell something at the wrong time.
Yeah, absolutely.
And look, if you are investing, then think about averaging into the market and doing it over a period of time. So you'll never pick the highs or the lows. And it's important to have that long-term view. Think about your property portfolio. Think about your share portfolio. Don't say you're a long-term buy and hold investor now, and then when times start to get difficult,
Then you have to sell.
Then you sell,
Yeah.
or have to sell, which is even worse. So trying to keep things simple, following some rules, and thinking ahead, like you're saying, around what might be around the corner is really important.
Yeah, agreed. Well, that's our Market Insight for October 2017. We'll see you again next month.